Hi, I'm Rob Curry. I'm here with Danielle Robichaud, who's a portfolio manager here at Lewisburg for the international and the US funds. We typically go through and talk about what's happened, what's transpired throughout the quarter, and how we're positioning our strategy through written form each quarter. But this time we thought it'd be a good idea to start to do a longer discussion and really go through the details to give more insight into what's going on and how we're positioned and how we see things unfolding going forward. So Dan, if you look at last quarter in Q1, we had a lot of expectations of kind of what we would have expected to happen throughout Q2. That didn't quite materialize maybe the way we would have thought. But I think that's a good place to start is what were we thinking in Q1, and then we can kind of go into how Q2 actually played out.
Yeah, so really our key message at the end of last quarter was there's still a lot of uncertainty about how we're going to go through that first phase of the spread of the virus, but also are we going to have a second wave after? What's the timing of a potential vaccine? There's other subjects from US elections, so a lot of uncertainty, but an investor that could look through the short-term volatility, we felt that a lot of that was actually reflected into the valuation. So it was not a bad time to be invested in equities. If we look at our funds, though, we generally tilted the portfolios to be a bit more defensive, just because that's where we felt there was a better risk-reward propositions for the holders. But that was kind of how we've been set up going through Q2.
Yeah, and so if we look at Q2, I mean, we would have probably expected a little more of a jigsaw, a little more ebbs and flows, but really it's just been enthusiasm met by more enthusiasm. So yeah, well, how did you see the quarter unfold, and what are some highlights you can give us?
Yeah, it clearly didn't play out as we thought. Equity market were pretty strong through the quarter, offering double-digit return in pretty much all markets. What gives the momentum? Really, it started in Q1 with government and central banks providing stability. Then it continued through the quarter with some early positive data on vaccine. There's also some economic data that was better than expected. So we think about better job reports in the US. So that really fueled the rally through the quarter.
Yeah, and the recovery, I mean, we wouldn't describe it as being uniform. It wasn't all stocks going up at the same magnitude. So there's certainly a discrepancy between some names versus others. Where were we seeing a lot of outperformance and a lot of underperformance?
Yeah, so one of the notable thing was the sell-off was pretty broad-based, but the recovery, we could see a lot more diversity or across each sectors and names. So really, when we look at the recovery market, was been thinking around who's the winner. So what disruption is COVID-19 gonna bring? And one example is e-commerce, and the name that comes to my mind is Amazon. So as customers don't want to go to shop at their local stores, really they've give a try to Amazon. And if they had a good experience, they're likely to be recurring customers because it's easy and it's get delivered at your home. So as those things happen, it tends to accelerate the disruptions. Other trends that we've been seeing or themes is the movement of IT infrastructure to the cloud, as working from home has been a big theme, and employers are trying to get better infrastructure so the employees are able to access everything they need from home. There's plenty of different things we can talk about, from cash to card payments and home delivery of food. So really a lot of things or trend that's been happening through COVID, and that really helped US equities just given their mix of exposure. So they really have a lot of IT with cloud, a big cloud team there, e-commerce with Amazon, digital advertisers with Facebook and Google, payment, we've got Visa and MasterCard. So a lot of companies benefiting from that. So that helped US equities outperform other markets.
Yeah, and obviously our portfolios are quite different than the market themselves. So when we look at contributions to performance, or why we would have varying performance versus the market, We usually take two different lenses. One lens is to look at sector allocation. So did we have more exposure to IT or less exposure, and did that help or hurt us? But then also looking at the stocks within those sectors, and did we pick the right stocks? Did we pick the right ponies? So that's the stock selection aspect of it. And if you take the U.S. fund as an example, we noticed that we really had a lot of headwinds because of our sector allocation. So meaning we were hurt by the fact that we didn't have as much IT exposure as the benchmark, for example, in a higher cash position. These kind of acted as a drag on performance, but we made up for that with some of our really strong stock selection. So yeah, why don't you go through how you saw that play out in both the U.S. and the international funds?
Yeah, so in the U.S., really we've been underweight IT for a while. It wasn't just kind of a COVID team; it's just been valuation and that we've been struggling with for a while. But we were able actually to recover that as we favored the digital advertisers, so Facebook and Google, which have a lot more attractive valuation. And Facebook was actually our best contributor this quarter. Some of our other names that have been doing very well is we favored the Dollar Store and T-Mobile, which is a discount provider for wireless plans. So we see both of those really benefiting from consumers looking for savings during those difficult times. So they've been performing really well, actually. If we switch to international equity, our positioning is actually quite different. So we're overweight IT, as we actually find good value in a lot of our names there. So that's been helping us. Other teams was Deutsche Post, which I actually would see as a cyclical name, but given the disruption going on in e-commerce, they're actually benefiting from higher parcel delivery. So that's been a good performer for us. On the negative side, though, we had catering companies, Compass and Sodexo, which we actually see them as a loser in this COVID-19 situation here, as the core of their business is actually cafeterias in office building. They're doing sporting events. They're in healthcare centers, schools, and universities. So with all the uncertainty about with working from home, when is education's going to start back? You've got sporting events that could take a long time. So they're probably one of the disrupted company, or we would see as a loser in this situation here.
Yeah, no, that's a good one to touch on. And if we look at transactions throughout the quarter, that the fund doesn't look the same as it did at the end of Q1, where we've made quite a few adjustments. So why don't you go through and kind of describe what we did there as well?
Yeah, we certainly didn't sit on our hands, and we keep constantly about kind of the teases on our names and what's the risk reward here. I think it's actually good to show we're disciplined, and the good example is we just talked about the catering companies, where we actually end up reducing back our way. So we were actually adding at the beginning in March, but then when it became evident to us that working from home is going to be a trend that will last, and also other disruption that going to happen, and we felt that the risk reward was actually not attractive anymore, or less attractive. So we reduced some of our exposure there. In the US, one example is we reduced our banking exposure, as we feel that the COVID-19 is going to have lasting impacts on consumers and small businesses, and it will actually end up hurting the bank. So we reduced our exposure. So that's kind of two examples of things we've been doing through this quarter.
Yeah, and we also took some time to initiate a few new names too. One of them being Visa in the U.S. fund. And I mean, we see Visa as a great company with strong tailwinds that we've liked for a long time, but we didn't really like the price. But this downturn gave us the opportunity to buy them while they were kind of in the penalty box because of their cross-border business. They make a lot of money off of travel and hospitality, and obviously that's going down quite dramatically. So we really had the opportunity to step in, with the structural shift that you've already kind of mentioned there with cash to card, where people are probably going to be using the actual Visa system a lot more often. But there were other initiations as well. So let's touch on those.
Yeah, so a good one I think that shows the cross synergies between the fund is we initiated a position in Otis and Schindler, both one in US and one in the international equity fund. they're both leading OEMs of elevator. What we like here is it's a boring company or boring business, but with good long-term prospect. So they're going to benefit from the aging infrastructure. They're focused on the residential market, so we don't see a lot of disruption there. But really, the opportunity is as they renovate those elevators, they're going to be able to capture the maintenance contract. So right now, a lot of those old elevators are serviced by independents. And as they're going to renovate or bring more technology in the elevators, we think the OEM is going to keep a higher market share on the service side, and that's really profitable for them.
Yeah, it makes sense. You really want the person who's made that complex technology servicing that complex technology when it starts to break down. When we look at our portfolios and you think about the strategy that we had at the end of Q1 and now looking into Q2, Q3, has there been any big changes? Have we, pivoted in any way, or how would you summarize kind of how we're positioning, what we're looking for going forward?
Yeah, so not any major change. I think we always think this about the market the same. Obviously, market valuation is more expensive now than they were at the end of Q1. Say we've been pivoting and a bit more defensive again as they defense. A lot of those defensive names haven't really participated to the same extent or at all with the market recovery. So now we actually see good values there. In the US, specifically, we continue to favor digital advertisers over the IT sector, where we think we get better valuation and similar growth profile. I'd say we also continue to favor kind of more the boring technology names. So I'd say I call them boring, but it's service and outsourcing. And we actually see them benefiting from COVID as those companies will be spending more money updating their infrastructure and buying more software. And they're going to need those IT consulting services company to help them integrate that. So that's where we're positioned in the US. In EFI, we continue to find good value in the IT sector, in both IT services, but software company like the SAP and Sage Group, which is an accounting software. And the other thing is we've been adding more exposure to staples. So think companies like Nestle and Danone, which have a really defensive portfolio, but at attractive valuation. So that's how we're positioned there.
Yeah, and as we've said, we emphasize this all the time, but risk reward is really important to us. So, I think you summarized it well, that we're really looking for companies that offer that perfect combination of strong balance sheet and good risk reward. So whether it's a defensive name that's got a good valuation, but also a strong business in an environment like this, or if it's a cyclical name that has maybe it's being impacted significantly by something like COVID-19, but offers a strong reward proposition, we're willing to kind of put ourselves there as well. And so I think that kind of sets us up well for what we're going to see in Q3 and Q4. I'm sure there's choppy waters ahead, but it'll just give us more to talk about. So yeah, thanks a lot for shedding a bunch of light on that, and I think it'll be really useful.